As 2021 comes to an end, everyone is wondering what will happen to the crypto market in the coming year. This is the focus of a recent report by Messari, and it contains some pretty powerful predictions for cryptocurrency in 2022. Today, I'm going to give you a bit of background about Messari, break down what the report says, and whether its crypto predictions will come true. Before we can advance, there is a disclaimer I must implant. If you came here looking for financial advice, I must give you a hard pass. This video is just an entertaining and educational rant. Contact a financial advisor if you need help with finance. If you came here by chance, my name is Guy and crypto is my romance. The Coin Bureau is where you can find quality crypto content that makes an impact. Coins, tokens, news, and reviews filled with fascinating facts. If this is the kind of content that puts you in a trance, try subscribing to the channel and pinging that notification bell to make it last. If time is running fast, you can skip around using the timestamps or watch until the end, perchance. Now that you know my stance, let's take a look at Messari's crypto forecast. If you've never heard of Messari before, here's what you need to know. Messari is a cryptocurrency analytics company founded by Dan McArdle and Ryan Selkis in 2018. Dan holds a bachelor's degree in computer science and economics. He's founded multiple companies and currently serves as the CTO of 2 of them. Dan is also the director of curriculum and content at the Digital Currency Council. Ryan holds a bachelor's degree in finance and dropped out of a master's program at MIT, quote, because Bitcoin. Ryan has founded a few companies of his own after briefly working at JP Morgan and Summit Partners. Ryan is also the former director of growth at Digital Currency Group, one of the largest companies in cryptocurrency. He even worked as managing director of CoinDesk, which is owned by DCG. In contrast with other crypto analytics companies, Messari typically takes a more informal approach when it comes to its cryptocurrency reports. And this report is no exception, and that's because it was written by Ryan himself. The title says it all. Quote, Crypto Theses 2022. Key trends, people, companies, and projects to watch across the crypto landscape with predictions for 2022. Now, the report is over 160 pages long, and I'll give you my thoughts as we go along. You can find the full report in the description if you want to read it yourself. Note that it's free to download. Messari's crypto report begins with a short introduction by Ryan Selkis, and the only sentence worth pointing out here is, quote, I own assets discussed in this report. My core holdings are disclosed at the end of Chapter 1, along with those of the rest of the Messari team. So, scrolling down to the end of Chapter 1, we can see that Ryan, who also goes by the pseudonym 2-Bit Idiot, or TBI, holds Bitcoin, Ethereum, Terra, Perpetual Protocol, Thorchain, Zcash, the FEI stablecoin, and its governance token, Tribe, and presumably shares of OpenSea since it doesn't have a token. Most of Messari's other employees hold more or less the same cryptocurrencies along with a few others like Solana, Aave, Helium, Arweave, Cosmos, and Polkadot. I'll leave a link to all the cryptocurrencies Messari's employees hold in the description if you're interested. Note that you can also find my personal cryptocurrency portfolio by subscribing to my weekly newsletter. That's in the description too. Anyways, on the page after the introduction, Ryan presents a screenshot of a tweet thread with the title, quote, Why We're Here. Now, I'll read the whole tweet thread because it's fairly short and very epic. Quote, I'm sick of feeling like we have to apologize for our early stage and walk on eggshells around politicians and regulators. We built a $2 trillion financial market from scratch in less than a decade with absolutely no institutional help and active encumbrances from government. Meanwhile, banks give you 0.025% interest on your deposits and front-run your trades legally, and DC grifters overspend and debase your tax dollars while they insider trade stocks with impunity. Like other early-stage, transformational tech markets, there are some characters, some bad actors. But mostly it's just brave entrepreneurs and innovators. Don't spit in our face and pretend you're here to save people from us. We started this movement to save people from you. Amen to that. The first part of Messari's crypto report concerns the top 10 narratives and investment themes for 2022. These are: the collapse of institutional trust, the inevitability of Web3, bridges, NFTs and DAOs, the decoupling of cryptocurrencies, the perpetual presence of VC investors, the top of the current bull market, surviving the bear market, cryptocurrencies outperforming the companies that support them, copy trading, and the cryptocurrencies Messari's employees hold, which I've already covered. So, starting with the collapse of institutional trust, Ryan highlights that almost nobody trusts legacy institutions anymore, and especially not the government. He then presents this infographic created by Andreessen Horowitz, which says it all. No institution is seen as both competent and ethical. Ryan concludes the section by saying that things will get worse before they get better, and the censorship of crypto companies and users will become common as people look to cryptocurrency as an alternative to the status quo. As for the inevitability of Web3, Ryan explains that cryptocurrency has everything it needs to reach mainstream adoption. Talented people working on crypto projects, lots of money flowing into the industry, and the timing of crypto development. The technology is here when we need it most. Because of the beautiful convergence of these factors, Ryan believes that there are 3 scenarios for cryptocurrency: a bull market top in early 2022, followed by a bear market, a massive 10x move across the board which lasts for a year or more, or a steady climb to successive all-time highs, the supercycle. Now, Ryan reckons that the first scenario is the most likely and also the most favorable because, quote, hyper-Bitcoinization and crypto's permanent ascendance at this stage of our development would only happen against a very dystopian backdrop indeed. When it comes to bridges, NFTs, and DAOs, Ryan points out that while certain NFT collections may be in a bubble, the NFT industry itself is about to explode. The only problem is that robust NFT-related tools such as bridges and decentralized governance structures based on decentralized digital identity have yet to be developed. There's also an absence of scaling solutions which can make NFT technology available to the average person. Ryan hopes that all these things will be addressed in 2022, which will be, quote, year of the DAO. Concerning the decoupling of cryptocurrencies, Ryan correctly points out that the term cryptocurrency is no longer sufficient to describe the crypto market. That's because the crypto market now consists of multiple categories with their own distinct features and fundamentals. These niches could start to decouple in 2022, meaning the coins and tokens within them will be less dependent on the price action of BTC. I actually covered a few crypto categories in a video you can find in the description. Now, regarding the presence of venture capital, Ryan begins by breaking out a chart that shows the billions of dollars being invested into cryptocurrency by VC. Ryan takes this as evidence that the institutions are finally here, and the fact that the money they invest tends to stay within the crypto industry suggests their record investments will continue into 2022. In terms of the crypto market top, the market value to realize value metric from Coinmetrics suggests to Ryan that Bitcoin will hit 100 to 125k in early 2022. For Ethereum, Ryan expects at least a 3 to 5x for ETH's current price of around 4k, but doesn't think that Ethereum will flip Bitcoin by market cap simply because Ethereum's money is essentially split between other smart contract cryptocurrencies. Ryan doesn't provide a price prediction for these Ethereum competitors, but notes that they are likely to move in tandem as we approach the top. Ryan touches on DeFi and NFTs too, and says that the former could offer high returns, whereas most of the NFT gains are likely to come from the crypto infrastructure that supports them, such as NFT-specific blockchains and Layer 2s. Ryan then talks about how we can prepare for the upcoming crypto winter, aka bear market, which will happen because of regulation and other factors such as ESG investing, which I covered in another video you can find in the description. In short, the next bear market will be brutal, and Ryan recommends the following. Quote, unwind leverage early, cash out tax obligations when incurred, and for the love of God, do not try to time the top. Now, the last two sections are again pretty self-explanatory. Cryptocurrencies are raising more money than crypto companies, and Ryan gives the example of Coinbase stock versus Binance's BNB, among others. For copy trading, Ryan reveals the most commonly held cryptocurrencies by crypto funds, which can be seen here. If you're having trouble seeing, or you're just listening, Polkadot, Near Protocol, Oasis Network, Terra, and Arweave are the 5 most commonly held cryptocurrencies by crypto funds. This is quite interesting, as my recent video on Near Protocol didn't get nearly as much attention as I expected. But it's not too late to check it out, folks, and you can do so using the link in the top right. The second part of Messari's crypto report talks about the 10 crypto people to pay attention to in 2022. The first person is WAGMI, which is an acronym for We're All Going to Make It, and Ryan uses WAGMI in the context to signify everyone who's invested in cryptocurrency. How kind. The second person is actually 3 people, and that's Kyle Samani from Multicoin Capital, Shu Zhu from 3 Arrows Capital, and CMS Holdings, who is apparently a popular personality on crypto Twitter. The third person is Emily Choi from Coinbase, who's behind the idea for Coinbase Ventures. The fourth person is Devin Finzer, the co-founder of the OpenSea NFT marketplace. The fifth person is actually 2 people, and that's Dan Robinson and Dave White of Paradigm, another crypto VC. The 6th person is Jeffrey Zerlin, the co-founder of Axie Infinity. The 7th person is again 2 people, and that's Tess Rinierson from Twitter and Jay Graber from Blue Sky, Twitter's decentralized social media platform. Now, if you've been keeping up with my weekly crypto reviews, you'll know that Jack Dorsey recently stepped down as the CEO of Twitter, and this could have some serious implications for Twitter's pending crypto plans. Even so, Ryan says to watch these women closely. The 8th person is, yet again, 2 people, and that's Kristen Smith from the Blockchain Association and Katie Houn from Andreessen Horowitz. The 9th person is SEC Commissioner Hester Peirce, which is certainly a good pick. She's been fighting hard for the crypto industry at the SEC and hopefully will succeed in helping to create regulation that clarifies which cryptocurrencies are securities. And last but not least, we have Do Kwon, the founder of Terra, who I am also a huge fan of. You can find out why by watching my latest video about Terra in the description. Ryan finished off with a few honourable mentions, including FTX CEO Sam Bankman-Fried, MicroStrategy CEO Michael Saylor, and Bankless Podcasts host Ryan Adams and David Hoffman. The third part of Messari's crypto report consists of Ryan's 10 thoughts and predictions about Bitcoin for 2022. To paraphrase, Peter Schiff will continue to be wrong about Bitcoin. Bitcoin will continue to be the largest cryptocurrency. 3% of all BTC will exist on multiple blockchains. 10% of all BTC will be locked in a spot Bitcoin ETF. China will allow Bitcoin mining again. Bitcoin mining will be used to bootstrap green energy. Proof of work and proof of stake will coexist. Proof of work will remain the most fair and secure of the two. Bitcoin development will continue to accelerate, especially on the Lightning Network. And the Lightning Network will consequently continue to grow, and we could see other countries follow El Salvador's lead in adopting BTC as legal tender. Now, you can learn more about what happened with El Salvador using the link up there in the top right. The fourth part of Messari's crypto report pertains to crypto policy in the United States. Ryan sets the stage by touching on the stablecoin report from the President's Working Group for Financial Markets, the infamous infrastructure bill, which recently passed, and a few other crazy crypto regulations from the United States and elsewhere. Ryan then lists the crypto risks that should be addressed with reasonable regulation. These are exchange risks, stablecoin risks, banking integration risks, anti-money laundering surveillance risks, tax evasion risk, and securities fraud risk. Ryan's final bullet point about privacy is more of a point than a risk, and it reads as follows, quote, "We might have to agree to disagree here and fight them on the beaches when it comes to transaction privacy. Peer-to-peer transaction reporting and disclosure requirements on self-custodied assets are unconstitutional overreaches. Get a warrant or we'll see you in court." Now, Ryan then talks all about the different regulatory bodies in the United States and their negative attitudes towards cryptocurrency. He calls SEC Chairman Gary Gensler a, quote, ambitious and highly competent political operative, though I would argue that Gary's allegiances are more closely aligned with his previous employer. More about that in the description. And if you prefer the Cliff Notes version over a video, you can refer to Ryan's thread about Gary Gensler and how he almost became SEC chair 4 years ago, which would have been the end of Ethereum. That's also in the description. Next, Ryan details the different groups that are advocating for crypto on Capitol Hill and how Messari is helping the war effort on that front. Ryan continues with a wish list of the 7 areas where he wants to see reasonable crypto regulation, and these are stablecoins, KYC while preserving privacy, taxation, community governance, specifically governance tokens, the legal recognition of decentralized autonomous organizations, the creation of a dedicated crypto commission, and the experimentation of crypto regulation at the city level. After briefly discussing stablecoins and the integration of crypto banks into the current financial system, Ryan turns to the traceability of cryptocurrency transactions and why this makes crypto an unattractive financial vehicle for bad people. He also drops the dank fact that only 0.34% of all crypto transactions are associated with illicit activity, which is far less than the percentage for fiat currencies. Ryan then rails against the US tax system and then gives SEC Chairman Gary Gensler a run for his money with a 5-page tirade which ends with, quote, "To hell with the SEC's mission." He's holding an entire emerging industry hostage, partially at the behest of Senator Warren, as he curries favor in his ascent towards Treasury Secretary. Ryan also takes some time to talk about the SEC's case against Ripple, which I won't even start getting into here. You can refer to my video about it in the description for more details. Ryan returns to the topic of privacy and the legal status of DAOs before providing a few pointers for a potential American Web3 Council, which could be tasked with overseeing the cryptocurrency industry. 4 of these pointers come from Coinbase's recent policy proposals, and these are: create a reasonable regulatory framework for cryptocurrencies, have one regulator concern itself with digital asset marketplaces, protect against manipulation and fraud in the crypto market, and promote competition and interoperability. Now, in the last 2 sections, Ryan underscores the importance of winning DC in the fight for cryptocurrency and closes with a Twitter thread by Punk6529, which talks about how the United States is the true home of cryptocurrency. I can almost hear the Star-Spangled Banner starting up. The 5th part of Messari's crypto report is about market infrastructure, and it consists of 15 fairly self-explanatory sections. These are basically: Bitcoin futures ETFs are shit and they will continue to be more costly than profitable for investors. Grayscale's Bitcoin Trust isn't all that great, and the SEC won't let it turn to a spot Bitcoin ETF. The reserves held by centralized crypto lending platforms are a bit sketchy, and regulators will crack down because of them. Cryptocurrency's centralized finance sector will continue replacing the traditional finance sector. Cryptocurrency exchanges will continue to grow. Initial litigation offerings on Avalanche will offer a way for the regular crypto holders to fight unreasonable crypto regulations. Crypto custodians could eventually hold 50% of all the cryptocurrency in circulation. The SEC will continue preventing regular US investors from participating in ICOs for ridiculous reasons. Crypto compliance companies like Chainalysis and Elliptic will provide a line of defense against regulators. There will be multiple payment innovations in the crypto space, such as quadratic funding for public goods. More about that in the description. US regulators will realize the importance of stablecoins in maintaining the dollar's status as the world's reserve currency. China's central bank digital currency could become a threat to the US dollar if it offers privacy to transactions being made overseas, which is a crazy thought. The Federal Reserve will continue to work on its own CBDC, though it won't be rushing, as per Jerome Powell's comments. Circle CEO Jeremy Allaire, who Ryan refers to as, quote, crypto dollar Jesus, will take center stage when USDC becomes the biggest stablecoin in cryptocurrency. And finally, USDP and BUSD issuer Paxos will likewise play an important role through its prolific partnerships with Facebook, Meta's Novi crypto wallet, and MasterCard. On that note, if you're interested in learning about Meta's Libra, aka DM, cryptocurrency, you can check out my video about it using the link in the top right. The sixth part of Messari's crypto report is about NFTs and Web3, and it also contains 15 predictions, which I will once again paraphrase for your pleasure. Most NFTs will go to zero, but NFT technology will, quote, impact every sector of the economy. NFT infrastructure, such as blockchains and marketplaces, will, quote, outperform, by a wide margin, the expected value of even the bluest chip NFT projects. NFTs that make you an exclusive member of a club will not survive in their current form, and that's putting it lightly. Fan tokens will become more popular. The top gaming studios will release their own play-to-earn crypto games. Composable NFTs like loot will become more common. The use of NFTs in DeFi will increase, as will NFT fractionalization. OpenSea will beat centralized NFT marketplaces because it's safe from regulation, at least for the time being. Cryptocurrency metaverses will beat big tech metaverses in the short term and lose in the medium term. If big tech metaverses become open, they will win in the long term because of the insane amount of money behind them. Meta is investing $10 billion per year, for example. Decentralized identity using NFTs will become a thing, and this will open the door to new kinds of NFTs. Cryptocurrency domains and data monetization will see significant development. Decentralized social media might see its, quote, Satoshi moment. The internet will continue to decentralize with the help of decentralized storage protocols such as IPFS and Arweave. The physical networks which power the internet will also continue to decentralize with the help of crypto projects such as Helium, which you can learn about using the link in the top right. The seventh part of Messari's crypto report is all about DeFi, and here's the abridged version of the 15 sections. Tether won't get tackled by regulators, and USDT will continue to be one of the primary bridges to crypto, which is a pretty bold prediction if you ask me. Terra's UST stablecoin will become the most popular decentralized stablecoin. Note that UST is currently only about $1 billion behind MakerDAO's DAI by market cap. Algorithmic stablecoins will become more than a meme. Stablecoins that aren't pegged to the US dollar will become more popular. WorldCoin will onboard over 300 million people by scanning their eyeballs. More about that in the description. Uniswap v3 will continue to dominate the decentralized exchange niche. Decentralized derivatives exchanges like Perpetual Protocol and DYDX will challenge centralized derivatives exchanges. New kinds of DeFi protocols will emerge as part of what Ryan calls DeFi 2.0. The most successful DeFi protocols will be those that deploy on multiple blockchains. Synthetic stock trading will become more popular despite being illegal in the United States. Decentralized front ends for dApps will become more common as regulators crack down on crypto developers running centralized front ends like they did with Uniswap earlier this year. Centralized decentralized finance will become popular, possibly to the point that token holders of DeFi protocols like Aave will push them to pass proposals which make them more regulated, a risk which Ryan notes is present for proof-of-stake cryptocurrencies as well. Decentralized governance will continue to develop, especially when it comes to how treasury funds are allocated. Decentralized insurance for DeFi protocols will be more accessible. Now, the final prediction is pretty funny because Ryan talks about the impact of vesting schedules on the prices of cryptocurrencies in 2022 and uses Solana's vesting schedule as an example of a project that has presumably had, quote, big long-term oriented backers. Solana's vesting schedule has long been a mystery to me, and Ryan linked to a Twitter thread which adds evidence to my suspicion that Sol didn't crash because of some coordination in the background by big investors in the project, such as Sam Bankman-Fried. Now, I happen to hold Sol as part of my personal portfolio too, and you can learn more about Solana using the link in the description. The eighth part of Messari's crypto report explores Ethereum, Ethereum's Layer 2 scaling solutions, and cross-chain bridges. It comes packed with 15 more predictions, which I will again summarize for your viewing pleasure. For starters, Ethereum 2.0 will supercharge institutional investment into ETH, partially because of proof-of-stake's compliance with ESG. Ethereum miners will not rebel against the transition because the two mining pools that did were apparently based in China, and we all know what happened there. Once the merge is complete, liquid staking will allow people staking ETH to use it in DeFi protocols. Ethereum's virtual machine will continue to be the most popular smart contract engine. As such, Ethereum will likely lose its dominance to EVM smart contract cryptocurrencies and Layer 2 scaling solutions. At the same time, Solana will cement its place as a top competitor to Ethereum, primarily because of its speed, but partially because it's not trying to copy Ethereum like other smart contract cryptocurrencies. Polkadot will continue its parachain slot auctions as part of its slow and steady growth. Cosmos will become extremely important as it becomes clear that interoperability is the future of cryptocurrency. Terra will face some trials and tribulations during the next bear market due to its UST dynamics, but Ryan believes the project will prevail in the long term. Ryan also believes that Polygon will eventually flip ETH because, quote, on a long enough timeline, all crypto will converge to zero-knowledge crypto. I will point out that he was probably referring to a flipping of daily active users, not of market cap. Also in 2022, optimistic rollups will become the preferred Layer 2s. In a few years' time, however, zero-knowledge rollups will take the top spots. By that point, the most popular bridge protocols between Layer 1s and Layer 2s, and Layer 2s and other Layer 2s will, quote, have higher daily volumes than the most popular centralized exchange. And last but not least, Ryan notes that, quote, we're just getting started in the crypto supercycle. There will be some bear markets though, which is why you should watch my video about the different bear market scenarios using the link down below. The 9th part of Messari's crypto report digs into decentralized autonomous organizations, or DAOs. It comes packed with 10 predictions. First, cryptocurrency wallets will double as our decentralized digital identities. Second, learn to earn will become a thing. Third, DAOs will begin to emerge as future companies and, quote, you'll work for a DAO someday. Fourth, there will be lots of experimentation in DAO governance and, quote, this is where Messari will be spending most of its resources going forward. Fifth, the composition of DAO treasuries will change to consist of more stable assets that don't pump and dump like the tokens that currently make them up. Sixth, tools will be developed to track how these treasury funds are being spent in real time. The 7th prediction looks like a bit of marketing by Messari as it notes it's building something related to DAOs. 8th, a legal framework will be created for DAOs, and given everything we've heard so far, it wouldn't surprise me if that's probably what Messari is working on. 9th, venture capital-focused DAOs will become more popular. And finally, data-focused DAOs will be in high demand. The 10th part of Messari's crypto report is titled, quote, Whatever I Want, and it consists of a collection of Ryan's thoughts about 5 things. First, Ryan insists that you must get better at writing, regardless of who you are and what you do, because engaging communication is the only way you will thrive in this coming age of hyper-growth. Second, you should not have any religious views about any topic, and especially not about any cryptocurrencies, because acting on anything besides raw information will lead to failure. This ties into Ryan's third thought, and that's to get your information from the highest quality sources that you can. He lists the few folks he follows closely, and I'll leave links to their socials in the description for your convenience. Ryan's fourth thought consists of 4 productivity tips, which can be summed up as: minimize your time on social media, minimize the time you spend in meetings, make your schedule known to the relevant people and stick to it, and make sure you get enough sleep and exercise. And finally, Ryan recommends getting married, having kids, and moving to the suburbs because it will keep your mind off the crypto market. He also explains that time is the most valuable thing and that every day is day one. Everything is in your control. A great way to end a 165-page report. And that's it for my video about Messari's crypto report. Remember that you can give it a read using the link down below, and don't forget to smash that like button before you go. Also, be sure to subscribe to the channel if you haven't already and ping that notification bell so you get a heads up when the next video is ready. If you can't wait for the next one to hit the tube, heading over to Coin Bureau Clips is what you should do. You can also follow me on Twitter, TikTok, and Instagram if you want to tap into my crypto mood, and join my Telegram channel for daily crypto updates that will help you. My weekly newsletter is where you can find the other crypto stuff that's on my mind, as well as a bunch of tools, tips, and tricks that will help your portfolio fly. If you're looking for a crypto-themed Christmas gift, head on over to the Coin Bureau merch store and take your pick. Order now because supply chains are shit. Thank you so much for sticking around. I'll see you soon, so don't you frown. Ciao for now.